The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 2nd, terrific Tuesday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary day. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I live by that principle, folks, it means that we can find the gift in every set of circumstance. That's our little 2x4 principle out there. And that's what you and I are going to do. We know that is the way to lead an extraordinary life out here. Now, my apologies for not being here yesterday. And I've got to give you an early warning here. And I couldn't be with you yesterday because my internet service went out at like 11:45, about 5 minutes after I sent out an update to newsletter subscribers. So I was grateful that I had gotten that out there. Things were really stable until about 12 noon today. So I put every nickel that I can into that machine to keep this thing powered up. But if we cut off during the show, I know they'll have some music or something lined up for you. It doesn't make a lot of sense to come to you and talk about technical patterns when I am flying blind out here. So we'll do the best that we can. I want you to know I'm absolutely grateful for your presence here. But more importantly, I am here to serve you. So I'd get those calls in early while the system is up, because I would love to hear from you at 877-927-6648. Internationally, 727-445-1044. Let's go ahead and get this party started on this terrific Tuesday, usually turnaround Tuesday, but not so fast just yet. We'll take a look at that possibility. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 269 points at 16,180. S&P down 32 points at 1907. NASDAQ Composite off 78 points, trading at 45.42. Russell 2000 down 22 points, 10.10. Gold is back $1.50. Silver is off 7 pennies. Light sweet crude back $1.39 right now. Leading the charge, the upside, you've got Google up $26. That's about 3%. You've got Chipotle up $9, about 2%. Michael Kors up 23%. That's quite a move, up $9 and change. Priceline off $20, down nearly 2%. Amazon off 3%, off 18. Royal Caribbean Cruise Lines down 17%, off 14. So let's go take a look at these markets. Let's go try to figure out both the bullish and the bearish case out here. So which one do we start with first? Let's start with the bearish case, since the market is trading down. So if we're going to do that, and it would be pretty wild if this was, if last night's pop going into the close was in fact the high. The reason why I say that, let's put this chart up on the screen out here. Slideshow from current slide. Okay, what you're looking at here, obviously last night you had the Iowa caucus, and we can all think about what we want about that caucus scenario. Okay, that's what so my thoughts about a caucus out there. But let's just take a look at what we're looking at here. So the real point is, we know this is an election year. A lot of people, you'll see charts out throughout the year talking about, a second-term president, talking about election year cycle. And most of those people, they're just regurgitating stuff. They're not really paying attention to it, diving down into it to try to understand what it really means. And that's other than you and I. So you and I, we have the secret where we actually go ahead and we do the work. We do the detail work to understand what's really going on inside these markets. Now, with regard to this, going back over the last 84 years, we've only had 21 election cycles, basically, right? So as we take a look at that and we break those 21 election cycles down, I've broken those down into years where the market moves higher, meaning that from the beginning of the year to the end of the year, the market closes higher, versus where the end of the year, the market closes lower. Kind of an important thing, wouldn't you think? Now, the interesting thing about those two different patterns during the election year cycles, 14 of those election year cycles, the market finishes higher. and 7, it does not. So you got what, a 33% versus a 67%, right around there. I think that's how the numbers would work out. I might be wrong on that math out there, but I think that's pretty good. And the brownish line, I'm not even sure if that's brown, but the brown line on my screen out here that you're watching us on election year cycles to the downside, right out of the gate from the beginning of January, the markets move lower. Now, that is pretty much normal with the annual cycle, over the course of the last 84 years out there. So it has that in common. However, election years where the market finishes higher at the end of the year, out of the gate, the market basically moves higher. That's the blue line on my screen out here. So which one do we have right now? Well, it's very clear that the cycle that the market is stuck in right now is one of those 7 this one would be the 8th out here, election year cycles where the market is going to move lower. Now, the interesting thing here is we've had a fairly decent bounce. Now, fairly decent bounce meaning some of the indexes about 50%, some maybe about the 0.382 level. But we've been dealing with such huge moves to the upside, to the downside, that's still a pretty healthy bounce. If we take a look at where we're at right now, right, we're going to take a look at the bearish case and we're going to go try to find the bullish case out there, because we have to take a look at both sides of the market. Now, this is not to be wishy-washy. This is for us to be able to take in the information and then make some decisions out here. In the 7 election year down years out here, we can see here's the move to the downside, and there's a bounce right up into, you'll never believe this, but you're going to have to believe this. There's a bounce that moves up into February 2nd out here. February, over the last 84 years, those 7 cycles to the downside, they have made a fairly healthy bounce. We're right in here. You can see my cursor. Fairly healthy bounce right into, in essence, today. Yesterday. We're not going to really work on this, right to the day. Although, when it does happen, it doesn't surprise me. Now, if that is the case out here, and we've begun the next leg to the downside, and the market decides to go ahead and move to the downside, this says what? This says that we don't get a really decent buyable bottom until about March the 9th. How's that for coincidences? If you believe in coincidences out here, March 6th, March 9th, when the markets out here made the lows, but that has nothing to do with that cycle. But you can see if we follow along these lines here, you'd have one heck of a major bounce to play. So that is just taking a look at analog patterns that are present. There's other analog patterns, but this is the one that's perhaps the most important for us to take a look at. Okay. If we put that together with, and I'm going to go, that's the Dow, by the way, that we were looking at. So that's the 84-year cycle, in this case here, the 21-year election cycles, based upon the movement of the Dow. So that says that what you and I ought to do is spend a little time taking a look at the Dow. Here's where it gets kind of really interesting out here. And that is this. You know that one of those patterns that you and I like to really focus on and pay attention is that 7th move out here. Now, I've gone ahead and changed the system so we can look at numbers versus letters out here. It only makes sense since that's the one that you and I really focus on this show. And if we take a look at coming into the close yesterday of the contract at 5:15, which is a great Who song, by the way, just to get a little off track here, wave number 7. Followed up after the market opened back up with a nice old bearish engulfing candle on the 5-hour chart. We're down below market profiles. Eerie how this is actually lining up with what we just looked at. Let's continue looking for the bullish and the bearish case out here. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 268, S&P down 32. And we spent that first segment taking a look at the market, understanding the patterns that are in play. So the first two patterns that we've taken a look at, we looked at the election year cycle, the specific cycle, the 7 out of the 7 election years during the last 84 that led to a down market at the end of the year. We see how the market has been following along that guideline, and that guideline suggests that we would see a top yesterday or today. So we have, in essence, we can say that, okay, check that one off of our list. Then we are taking a look at the Dow futures contracts. We took a look at that 5-hour chart, that pattern, one of those patterns that you and I like to take a look at that is helpful in understanding and identifying market tops and bottoms, that seventh wave move, in this case here to the upside. That took place. We saw a nice bearish engulfing candle that had formed out here. We now see the prices below its level of support when we take a look at its TAS market profiles. Now that is on the 5-hour chart. Let's go take a look at the other charts out here. Let's take a look at the other time frames inside the Dow, and then we can switch around. If we take a look at one of our second favorite patterns out here, this is where the market moves higher or lower, does with less energy. Well, in this case here, it just so happens we saw a nice push up during the last half hour of yesterday's trading. That push to the upside went ahead and created that price relative strength divergent pattern. Then the market opens back up, and what do we get? Actually, at that session, I should take that back. The session between the 4 p.m. close and the contract close out here, you get a nice little dark cloud cover and some follow through during that very next session. On the 2-hour chart, interestingly enough, we can see that price is trading right below its market profile. Now, this profile out here, set up from a bullish configuration standpoint, this chart is a 2-hour chart, and this chart does not complete, or the candle session does not complete until 2 p.m. So we've got 40 minutes to go in this session to understand whether or not price is really going to close below support, which is 16,113 in the futures contract for the Dow. You close below it. That is not a bullish signal out here. That is on the, so we know we've got another bearish looking pattern. When I say bearish, topping, really looking a pattern out here that is inside of the Dow. If we switch over now and we go to take a look at the 30-minute chart, we'll go take a look at a daily chart as well. But as we take a look at the 30-minute chart out here, what we're going to identify is that from that same top yesterday afternoon at 4 p.m., that same nice little push to the upside. If we start doing our counts to the downside out here, we can see that more likely than not, we're going to see at least another push lower between now and who knows when, but the end of the day, getting to a seventh wave move to the downside. Now, as that happens, we are also on this 30-minute time frame, we are also, or the market is also in the process of forming a price relative strength divergent pattern, or it could be out here, meaning that price could be moving lower, doing it with less relative weakness out there, and possibly also getting to a seventh wave. So that would say that if, in fact, those patterns play out, and I would love for them to play out during the show, but we've got to get some real action jackson between now and really the next 8.5 minutes out here, probably, if we're going to get any push lower and confirmation of the patterns that you and I like to take a look at. And the market doesn't usually respond to my time schedule. Instead, we have to wait for its time schedule to provide us with information. So there is that possibility on Turnaround Tuesday or Bounce Tuesday that we could see the market with another push lower. And then if we see the bulls try to run in here, we get a bullish reversal signal. You could see the market take back some of the losses before the close. Doesn't have to work out like that. All this can work out in the overnight trading session. And where we will probably get this next message on this 30-minute chart is if that pattern sets up that you and I just took a look at and it fails altogether, that will just simply join what we looked at on the 2-hour chart and on the 5-hour chart. Now, on the daily chart, let's go take a look at a little longer term time frame. It doesn't look really great. Now, when I say really great, if we take a look at what right now the Dow futures contract is doing, it's trading below a, well, no, it's not. It's trading right into, it's trading right on it, we'll call it. Let me just do this. I'm going to put, it's this candle session right here, but let's do this. This is the first bullish candle inside the Dow futures contract that occurred coming off of the bottom. That's this nice little bullish engulfing candle. That says the high of that session, which is 16,101, and you're at 16,086. That 16,101 should be support. So here's the deal. If you see that seventh wave move, price relative strength divergent pattern all play out by the end of the day, you see a price move above 16,101, then all that has transpired thus far is a retracement back to a level of support inside of the Dow futures. On the other hand, if you get a close below that 16,101, then things are not looking good. Now, if we go take a look at the actual cash indice out here, the Dow, hey, at least if we do get cut off here, at least I will have been able to have covered one side of the market for you, you know, and I'll just keep putting more money into the machine out here, see if we can get the internet to continue working. If we take a look at the advanced decline oscillator for the Dow, we're one issue away from this thing being negative. What I mean by that is that there's only one issue inside of the Dow 30 that is trading to the upside. I believe that it is DuPont out here, but I could be wrong. Let's go see which one it is. It is DuPont. So out of curiosity, and then we'll go back to take a look at that chart. Let's go see, is there any possibility that that DuPont is going to move to the downside out here? And I'd have to say, shoot, heck no. Take a look at what DuPont actually did out here. If you're looking for a buy in the Dow for some reason, DuPont is your baby. But if we take a look at DuPont, this might have been the this is the nice wide-ranging bar and gap up on October 6th, which had 40 million shares, and price came right back to that gap up area, to that level of support, did it with light volume. 6 million shares on the 20th, tested again on January 28th with 4 million shares. Take a look at the trading session of January 29th, 6 million shares. And yes, what the talks about what DuPont and who they merge with out there? DuPont and DuPont. In any event, out here, it doesn't really matter. What you're seeing here, price came back to a level of support. You know, we just technically trade this out here. It's not. Here's really my point. This is not really talking about what's it likely to do tomorrow. We're not likely to see DuPont close at its close below its open, close below yesterday's low of the day, or actually the open of yesterday's candle out here, or even the close. Let's just take a look at the close of yesterday's candle. That's what you'd have to do. That means DuPont would have to give up its gains and close below 53.30 near at 55.76. So on the cash industry, we are not going to see the advanced decline oscillator get below zero. So what's the meaning there? Well, the meaning there is that bulls are still in control. Prices really come back to a level of support out here. So I'm going to put all the weight of the shoulders of what the market is going to do. If it's going to be a turnaround Tuesday, if it's going to be just simply a retracement on light volume, I'm going to put it on the shoulders of that Dow 30-minute chart out here, and we'll see if, in fact, that's the pattern that forms out there. If I take a look at the other indices, let's say a couple other indices, the New York Stock Exchange, that price oscillator is still above zero. The advanced decline oscillator above zero says that it's still bullish out here. Inside the NASDAQ composite, the same pattern out here as well. So those are suggesting possibilities of positivity. If we take a look at the VIX index, well, let's just do that when we get back from the break. But we're going to be paying attention to the number 20.89 and you're 21.55 right now. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 258, S&P is off 30. So we spent those first two segments really trying to break apart the Dow futures, what's going on there because of the different patterns. And as we were going into that last segment, we were talking about, okay, it's really up to the Dow 30 chart. to go ahead and turn this into a turnaround Tuesday type of scenario. Not that it goes to green, but nothing is out of the question out here. So we started to take a look at both sides of the trade, meaning, all right, there's a pattern out there that you want to pay attention to. Look, if you're short the market right now, depending on your trading style, you want to be paying attention to that pattern. Well, let's take a look at a couple other patterns that are worth noting out here with price coming back to a potential level of support. Let's take a look at the ES Mini as an example. Let's focus on, in the ES Mini, let's focus on the 2-hour chart out here. And we take a look at the 2-hour chart. Well, we were going to focus. There we go. As we take a look at the 2-hour chart out here, we're going to see a couple of different patterns or levels for us to be paying attention to. You see some green diagonal lines out here. Those green diagonal lines are the rising price channel that price has been traveling within since the bottom that was formed back here on the 20th, on January 20th out here. And we can see how this level has really acted well as support. Now, these lines were drawn in here yesterday. And we can also see that since that period of time, maybe they were drawn in before that actually, but what we can also see is price thus far has pulled back to the bottom of that rising price channel, which happens to just simply coincide, if you believe in coincidence, right? The root of the word. If we take a look at it, it's coinciding. Don't know that that's a word, but it is. And price has pulled back to the bottom of its TAS market profile. Now, this market profile out here is not a bullish profile. What do I mean by that? I mean, the point of control is closer to the top of the box, and but that doesn't mean that price is going to fail here. But if you do see a failure, and we'll call it just simply some type of close below 19.15 out here, then that is going to suggest we're going to see more downside action. Where would that downside action take us to? It's an excellent question. Let's go find out. That downside action would say if you get below 19.15, 18.88 is on the table. 18.56 is on the table as well out here. But we're going to take things one moment at a time. At this stage of the game, no bullish reversal or anything, but we have seen that prices come down to a level of support inside of the ES Mini on the 120-minute time frame out here. If we go take a look at its 30-minute chart out here, so we step things back a notch, you can see that it, just like the Dow, only in wave number 6 to the downside. We did have a hammer candle that formed out here just as we were going into that last segment at 1:30. So you do have some signs that the buyers of the bulls are trying to take a charge out here. Your preference and mine now between 1:30 and 2, or maybe 2 and 2:30, or whatever the time frame is to see the ES Mini push down one more time to at least go ahead and get that seventh wave formation in place out here. Don't know that it will do it. We do see that bulls out here are trying to step in. Price needs to get above the 19.03 mark, which is the bottom of its 30-minute box out here. If you can get above that, then it stands to reason you could see a bounce to 19.12. However, it could be that the cavalry actually arrived, and the cavalry being that cavalry that is part of the NQ out here. If we take a look at the NQ 30-minute chart, what we can see is as we were coming into that 1:30 close on this bar, it did get to a seventh wave. Now, ideally, the way that this would set up is during this 30 minutes between 1:30 and 2, we'd see an even lower price inside the NQ. By the way, the low so far out here inside the NQ, 42.0275. So we'd see a move below that. That would just extend that seventh wave. That alone should put enough pressure in both the ES Mini and the ES Mini, enough pressure to get it down to its seventh wave, maybe even test the bottom of that hammer candle, which, by the way, is 18.98 So push down below, actually the price point needs to push below is 18.9675, and then actually close back above the 18.9825. That would be a nice little nuance there. And then if we saw another bullish reversal signal inside the NQ and the Dow, that's what would get both everything in sync, quite frankly. And when I say everything in sync, you've got 2 of the 4 indices that you and I track, because we haven't looked at number 4, and that's the Russell 2000. Again, I have a 10-minute delay out here, but we can see in the Russell 2000, it has already made its seventh wave session, just as it did yesterday. Yesterday, when the market was bouncing, should be no surprise to anyone, because it began at 10:30. in the morning when you had a seventh wave move. It really didn't confirm until 11 o'clock, but you did have that seventh wave along with a nice little bullish reversal signal. And we saw that move higher. We saw that spike higher. That's what really created that seventh move to the upside inside the Dow 5-hour chart out here. So, we don't want to disregard these patterns out here. It may just be nothing more than, a little short covering rally, whatever it is. It's a bottom-ish style pattern for you and I to pay attention to. So hopefully that assists you with being able to how you're going to go ahead and assess a market, take a look at it, use multiple time frames to really get your head wrapped around it. Now, do you have your head wrapped around it? That's really my question to you. Did I do a good job of helping you to wrap your head around the market? Let's summarize. Number one, we know we have a cycle pattern that is the down years in the presidential cycle. There's seven of them, 7 out of the 21 that you and I can look at for the last 84 years to have any relevance. And they say the next tradable top came in basically yesterday or today. Okay, so far that's playing out pretty well. We start to see these seventh wave moves that are potential out here inside the 30-minute chart. We start to see those fail. That spells double trouble out here. If we start to see those advanced decline oscillators move below the zero line, that's bad news out here. Still not enough net decline in issues inside the NASDAQ or the New York Stock Exchange, but we could easily get that by the end of the day. I mentioned before we went to that last break, we're going to pay attention to the price point of 2089. If the VIX index closes above 2089 and all those other things are in shape here, you know what this says. If you're long, you're probably wrong. Long the indices out here. At least you're not getting any confirmation, and you must have something up your sleeve that that I can't figure out or see out here. But all those signals would say we probably have started that next move to the downside. What is going to cause that additional follow through? Well, just handing the ball off to Asia in a poor way would not be a good thing out here. So so that's on the bearish side, and we'll just have to wait to see intraday what sets up out here inside of these shorter term charts. Okay. So that's that. There's a question that came emailed to me that says, hi, Steve, can you pull up a chart on USO? And I would have to say the answer to that is, as long as my system is up here, of course I can pull up that. But it doesn't ask me anything else out here. I can only assume that I'm pulling up a chart on the United States Oil Fund because somebody's either long or short. Now, I don't know which one it is, but let's take a look at the USO. But then let's really go take a look at light sweet crude because I can pull this chart up here, but it almost doesn't mean a hill of beans to me. Instead, we need to go take a look at the underlying instrument. What does the USO chart tell us? Well, it tells us today volume on the retracement on the move lower, 28 million shares. We made a bottom out here on January 20th inside this ETF with 83 million shares. You moved a little bit higher, little volume off of that low with 87 million shares. So the USO is pulling back on light volume. Let's go take a look at market profiles when we get back from this break inside of the light sweet crude futures contract. Let's go figure out where support is because it does look to me like price wants to go a bit lower, maybe 29.26. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 283, S&P's down 34 points. As we take a look at the light sweet crude contract out here, what we notice is really a couple of things. Number one, we can see that you've got a new box, new TAS market profile daily box out here that formed. This formed yesterday, as a matter of fact. And the bottom of that box, below or above the previous bottom, the high above the previous high. That's actually somewhat of a bullish setup out here. But price has found resistance at the top of yesterday's box. In essence, that's priced out at 34.82. And what we are looking for is the bottom of the box, a level of potential support, plus your testing a swing point. So you're testing the swing point from January 20th, the top of which is 29.75, below today so far 29.81. So we've not had a successful test of that swing point. It's very likely that we'll see a test of that swing point, and perhaps we'll see price test the bottom of the box. As long as light sweet crude can stay above 32.04, and your ideal trade is to really, at this stage here, is to not use that, but you want to see light sweet crude at least test 29.75, ping it, close back above it, then you have a rejection on price and volume. But with regard to this trade out here, light sweet crude is going to find a resistance at 34.82 until it breaks through that level. That's what you should anticipate. So it's a relatively narrow box. And I would say if you're trading the USO, you're trying to trade light sweet crude, don't do it with USO. It's just to me, I just don't see where you can't get out of this trade out here in the overnight hours, especially 3 or 4 o'clock in the morning. If maybe the trade starts working to your advantage and then things start to back off and you've lost out on an opportunity. You've got narrow boxes. You're certainly not, we don't have any kind of specific indication that there has been a significant bottom that has formed out here. I would say don't do it. Look around for something else that might give you a better opportunity for some trading success out there. So that was on USO. Had a request to go take a look at Weight Watchers, WTW, Oprah Winfrey's newest best friend out here. At least it had been. A lot of that. I don't know what she actually. What her shares were that she received, what that was priced out at. But let's just assume you weren't Oprah and you were just somebody trying to trail Oprah, and you would see that price came right back to where it broke out. So I believe that deal was promoted. Promoted, there's a good word. It was promoted on October 19th. And we saw Weight Watchers. We saw it take off to the upside. It went from a price point of, that's a good question, where's my data box? It went from a price point of, in essence, on October 16th, $6.93. And it went all the way up to $10.76. It actually went higher than that. That was the low of the trading session on October the 19th. Volume there, major volume. You're looking at 71 million shares. We watched Weight Watchers come back and test that level the trading day of January 20th with 5.2 million shares. Price is trading lower. It's likely to go ahead and ping 1076. As long as price does not close below 1076, and then prices come back to a breakout area. And it's done it with light volume out here. However, Weight Watchers has got this big, huge downdraft bar from January 8th. That says that there's resistance at the price point of 14.44. That's still a pretty decent trade, 10.76 to probably 14.44 out there. If price gets below 10.76 and you were long in the tooth on this trade, be careful, because price could easily come back to the real breakout area, and that's right around the 6 and change, 693, 668. Could even move a little bit lower than that. So watch 10.76. That's your line that is drawn in the sand. You don't want to be on the long side of Weight Watchers if price gets below that. It doesn't matter to me even if it is on light volume. You've got too wide of a breakout gap to be dealing with, because price could pull all the way back. Okie dokie. Let's go take a look at this market is working out just like you and I have been asking for. Updated. There we go. I see it. We've got a call list out there. We've got Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you doing today?
Very good, Steve. You?
Excellent. Thanks so much for asking. And you wanted to take a look at Nugget. Tell me what you're doing, how I can help you.
Well, I was in it, and I got stopped out at 25, 23.
Okay. Did you make some money?
A little bit, yeah.
Okay, good. Okay, good. Glad to hear it. And how can I help you?
And I was wondering when to get back in, if that's feasible or not.
I would say at this stage here, now is not the time. Let's take a look at what Nugget is doing. Let's take a look at it a couple different viewpoints. First, we know that the NUGT, and we're just simply going to take a look at this. We're not going to take a look at the GDX or anything else. So we'll just make our decisions, Lou, you and I, based on what Nugget is doing. So Nugget has a swing point that it traded into, which was from January 7th, and it had 9.6 million shares out there. The bottom of that candle session is 27.92. Now, yesterday, it happened to close at $28. So it closed inside that. It was pushing with volume, 8.9 million, still lighter than the 9.6. And we've seen price now move back below it. Today's volume, we could say today it's pushing lower with a little bit lighter volume, 4.4 million shares. But the problem, Lou, is that I just think the risk reward may not be there for you to come back in on this trade right now. If you made some money, keep that off to the side. It's possible. It's very possible that NUGT wants to go test 3150. Here's the other thing that Nugget is doing. If we just take a look at a volume metrics, there's another swing point to the left, and that's on December the 4th. And that swing point has got 11.9 million shares. We'll call it 12 million shares. So yesterday, in essence, it's pushing into that with light volume as well. It looks to me like Nugget is getting ready to stall somewhere between where it traded into yesterday, $28, $27.92, and the 31.70-ish type level out here. If I take a look at its TAS market profiles for levels of support, what we're going to see is that it would say to me that your best buy on NUGT, Lou, would be between 22.23 and 22.70, as opposed to trying to jump back into it today. Now, it's possible that no matter what you and I are looking at right now, that Nugget decides to move above 31.70 for whatever reason. Then we would very much have a potential breakout. I don't believe that is what's going to take place. That doesn't mean that yesterday was the high and this thing won't move a little bit higher. But I believe that the miners are going to be, that they are preparing for some type of pullback. Still may go higher, but I think they're really preparing for a bit of a pullback here.
Okay. So hang tight and just wait.
Yeah, I really would. I just I would. I just I don't see the risk. I don't see the reward here. If you get into 26.78. And this thing stops at 28.70. If gold starts to pull back, and it's really all going to be about gold. If gold starts to pull back, you're better off waiting to 22.23.
Sounds great.
Alrighty. You bet. That was Lou in Nashua, and that was taking a look at the NUGT, the Direction Daily Gold Miners Bull. We've got the Dow now off 297. We should be in those seventh waves. Let's go take a look at it when we get back from this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 305. S&P is down 36. The composite off 95 points out here. I mentioned, when we began the show, and hey, knock on wood, we've made it through. And even if we get cut off here, not a big deal out there. So that's a good thing. All right, the NASDAQ, we know the NQ, we know that it's in its 7th wave. We're looking at just the 30-minute charts out here. So we know that it's in wave number 7. out here. We know that the ES Mini, well, we don't know that, but we're going to go take a look at it. The ES Mini now has joined along. It's also in wave number 7. Looks like we're not going to have a nice little price relative strength divergent pattern out here, but we'll know for sure in about 6 minutes at time. But it is in wave number 7 out here. Let's take a look at the Dow futures contract. It also is now in wave number 7. It has been moving lower with less relative weakness out here. Now, the bulls have to rush in. I don't mean right here between now and the next few minutes, but during the next couple of hours. Well, it doesn't have to. It could do it overnight, too. So it just depends when we get a confirmation of that 7th wave move to the downside out here. We can see you got the same pattern going inside the Russell 2000. So we've got synchronicity. That's not even we're in sync. Not the band in sync, but the market is in sync. It's synergistic out there with regard to potential bottoming patterns, certainly ones you don't want to ignore out here. If I take a look at what the heck is going on volume-wise, I don't really care to use that much of a matrix inside the index ETFs out there. I think it's pretty much meaningless, but, so I'll do some meaningless work with you here for a moment. If we take a look, you've got a retracement so far today, 28 million shares going into 54 million shares on January 29th. So, up with 54, back with 28. 28 says you're going to do maybe about, 4.5, about 40 million shares. So you've got a light volume pullback basically inside of the Qs. I imagine we're going to do the same thing all the way around. And all the way around, if we take a look at, you were up with 50. That's the Qs again. Let's go try to take a look at the SPYs. There you go. Work with me. I guess I should cut it some slack. It's been pretty good because the system's been working. But up with 210 million shares, you're going to be today inside the SPY. Looks like maybe you're going to do roughly 148. So you've got a retracement on light volume. I don't care. If these 30-minute patterns they fail, they don't hold. Whenever they actually set the hook out here, those longer-term patterns that you and I began the show taking a look at, those are the ones to focus on and pay attention to out there. So I see a question about the VIX index, or somebody posting something about the VIX being at 22 and there not being much in the way of fear out here. Look, the better way to use the VIX index is not with regard to the number. It is with regard to where it is trading at in relation to its 50-day exponential moving average. And I will show you exactly what I mean out here. We can take a look at, because when price is below the 50-day exponential moving average, you're going to see what happens out here is a market, the stock market, the S&P 500, is going to do one of two things. It's either going to move higher or lower, and it has nothing to do with the number. If you come back and take a look at on the trading day of March 10th, 2009, you had the VIX index trade below the 50-day exponential moving average. By the way, that was closed at 44.37. The number has nothing to do, the VIX index number has nothing to do with whether the market is bullish or bearish, whether there's fear or not. You, from a trading standpoint, what you want to do is understand where is that in relationship to the 50-day moving average. I promise you one thing. You go out there and you apply that to the VIX index, and then you take a look at on the same chart whether the market's moving higher or lower. If the VIX index is trading below that 50-day, the market is not moving lower. It's moving higher or sideways. So hopefully that assists you with your trading and investing. Stay tuned. Our man David White is up next. And then we got the Tom O'Brien Show. We've got Terrific Tuesday. That means Andy Heck from 5 to 6. And I believe Tom's got a workshop tonight. So hopefully you're signed up for that as well. Take care, folks. Have a great Tuesday, and see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.